Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around and look for something to trade. Well, the last few weeks it's been earnings season, so you've seen a lot of wild rides for certain stocks, big moves. And you can see essentially over the last couple months, the market's also been in a kind of a wild ride. It took a huge dive right here, and it's had a huge recovery over the last few weeks. So it's also been on kind of a wild ride. And as we know, when market crashes, that means volatility goes up. So we made some volatility based trades. When the market goes back up, you can see volatility goes back down. So the volatility in the market's coming down, at least during this new kind of big wave up. So what are we going to trade? Because the market all looks about the same, whether it's SPY, which is the S&P 500, NASDAQ's looking about the same, IWM's more in like the low range, but essentially the market's all around there and the volatility has slowed down a bit. So let's go over to oil. So here's oil, and you can see oil has been on a crazy ride for the last few months. It's been essentially going straight up for the last, since November. Last 3 months, let's say. So what are we going to trade? Well, myself as a contrarian, meaning when the market's shooting way up like this, I personally look at this as an extreme, and I make a bet that the stock from here is going to come back down. That's as a contrarian thinker. If you're a trend trader, which means you follow trends, you're going to consider that this is just on a trend going up and you're going to keep going up. So what I'm going to do is show you how to make either one of those trades, depending on how you think. Because again, we always have to make assumptions when we make a trade. We have to make an assumption on there whether it's up, down, or sideways. In this case, like I said, this is an extreme. It could keep going up from here and it could take a dive from here, but either way, this graph, this stock, oil has been on a wild ride for the last few months, essentially straight up. So let's do it. Let's see how we pick our direction based on our assumption. So again, we're going to go over here to the 40. Even though this will be closer to 45 tomorrow, when the monthly cycle, which is this one, you can see this says weeklies, is available in about the same time frame, I always go here because it's just more liquid when it's in the monthly option expiration cycle. Just more people trade it, which means there's better liquidity. So we're going to open this up and keep it small because we're just staying right kind of at the money. So here's how we set it up. So let's say you're like me and you want to bet that USO or oil is going to go down from here. What we do is we always start by buying, which would be a put vertical. We're going to buy a put vertical in this case. I always start by buying the put directly above the stock price and selling the put directly below the stock price. So if I go here, you can see I go to buy vertical and it sets it up. And this is a $1 wide vertical, as you can see. And when we're trading verticals, we're looking to pay somewhere in the neighborhood of 45 to 55 cents. Now that number is not in stone. That's just kind of a general kind of bar to set to start with. You can kind of pick your own number depending on what you are willing to risk and what you're willing to make. But I find that 45 to 55 cents debit price, purchase price, is a good kind of starting point. So here's what we're going to do. In this case, it fits our rules because it says 48 to 60. So if this is anywhere between 45 and 55 cents when I buy it, totally fine. So that's if I think USO or oil is going to dive from here. What happens if I think it's going to go up? Well, in that case, I do the opposite. So I start by buying a call directly below the stock price and selling a call directly above the stock price to create a call vertical. So we'll do that now. I'll buy this vertical. And here, as you can see, it's trading for 53 cents, which is perfectly within our realm as far as like 45 to 55 cents. That fits our rules. Now the market's closed, so this is pretty wide. But let's say tomorrow this opens and it's 65 cents, for example, and that does not fit our rules. That's paying too much to risk to return too little profit-wise. What we're going to do then is we can start playing around with these strikes. So in this case, I'm going to assume that this is out of our range because this is pretty wide. So most likely, if this was the market today, this is probably about a 60-cent debit because it's going to be somewhere between these two numbers to get it filled, and it's not going to work. So what we do then is we just widen the strikes and see if we can make it work. So 64.91 is pretty much right on 65. So if I make this a $2 wide vertical, I make this $66 instead. Remember, I'm looking to pay 45 to 55. So if it's anywhere between 90 and 110, then that's going to be a fine trade for me. And you can see it fits our rules right here if I go $2 wide, because even on the wide markets, we're going to get filled somewhere in between this number, and we just want to pay somewhere between 90 and $1.10. This will absolutely fit that. So if nothing changes tomorrow when the market opens, and this is where we're at, and we want to still make this trade betting the stock is going to go up from here, a trend trader, then we'll just widen out the strikes and see if we can make it fit our rules. We can move these things around, but again, we always have at least a call below the stock price and one above. We never have them both below or both above. So you'll play with this, and if you can't make it work, you just can't make the trade to fit our rules. Same thing on the put side. We always buy above and sell below. Essentially, we always want the stock price between our two strikes, whether we're buying put verticals or call verticals. So that is our trade based on your assumption for tomorrow morning. Hello everybody, and welcome to what I believe is an exciting opportunity. Now, many of you might be familiar with my classes up on Udemy, these 5 courses that I have on Udemy right now under the Option Trading for Rookies series. And my goal, if you follow along with what I'm teaching, is to really get you all up and trading as confidently and as quickly as possible, which is why I really believe this service I've created is the best way to get to the next level. Now, if you go to sharpertrades.com and you go to the courses page, you'll see these alerts pop up, and the option basic trade alert right here sends out 2 to 3 trades per week in real time. These are trades I'm actually making at the time I'm making them, and on top of that, they'll send you the alerts when I close these trades for the maximum profit potential, best return on that trade. Now, normally it's $49 a month, but I want to reward all of you who want to take advantage of this because you're taking my course. I feel like it's in your best interest and mine to get you kind of up and going as cheaply and quickly and confidently as possible. So go to Sharper Trades, go to courses, look up this alert, and then what happens is if you type in this code right here, basic option FB1, so when you click on this alert, it'll take you to a page where you can type in this coupon code, and for you lucky few that want to take advantage of it, I'm going to give it away for $1 for the first month, because that's how important I think it is to get up and trading as quickly as possible, or at least see somebody trading to see how it works. Now, as I said, it's only $1 for the first month. If you stick with it, it'll go to $49 a month, but you can cancel any time. So if you want to do it for a month just to see what it's all about, great. If you want to keep going, great. But again, this is to thank you for being such loyal and studious students, because like I said, at least for me, the best way to learn how to trade is to get up and trading with somebody that's trading in real time, which I am. So take advantage of this. Go to the Sharper Trades page, type in this coupon code, and go ahead and get this for only $1 for the first month and see what trading looks like in reality. And you'll get up and trading, I believe, quickly and confidently, much quicker than just trying to learn it through book smarts. So take care, and please continue on with this course. Thanks.